Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, August 4th, 2022. Starting with markets, we have stocks up this morning, commodities mixed, crypto down, dollar flat, global bond yields mixed, market moving headlines. So the global liquidity cycle downturn continues. The Bank of England delivered the biggest rate hike it's delivered in 27 years, warning that the new economy faces more than the new PM, prime minister rather, faces more than one full year of recession per their revised forecast, which would be the longest slump we've seen since the financial crisis. It raised its key rate by 50 basis points to 1.75% and said all options are on the table at its next meeting. Governor Andrew Bailey boosted the forecast for inflation, calling for a peak of 13.3% year over year in October, and outlined plans to become the first major central bank to actively sell bonds. Recall that the Fed's quantitative tightening is more about redemptions and rolling off of the balance sheet as opposed to actively selling them. Sales will probably begin next month in the region of about $10 billion a quarter. So central bankers all around the world are acknowledging that they did way too much in the early onset and the middle part of the pandemic to stimulate demand. And now that we're left in a situation where demand is egregiously outstripping supply globally, and this is why we continue to see central bankers tighten pro-cyclically into a downturn, which is very rare and usually does not end well. So the global liquidity cycle downturn continues even in South America, even in Argentina, a place where liquidity has always been extremely abundant, like usually culminating in record inflation and currency collapses. But so you have Argentina's new economy minister, Sergio Massa, pledged to stop printing money in a bid to combat inflation. He's committed to boosting exports, reducing the fiscal deficit, and increasing the central bank's dwindling reserves. By Jove, I've been doing this for a long time now, and I've seen this story out of Argentina and Brazil so many times, and so many times we've been disappointed. It'll probably cause a pop. But again, I think you got to start the economy ministers, prime ministers, presidents in these countries tend to have a really hard time of actually implementing fiscal discipline and monetary discipline. So we'll give him the benefit of the doubt, my friend Sergio Massa. We'll see. We'll check up on you, check up on the ARGT ETF in a couple of weeks, see how he's doing, see how the market grading his initial progress there. And then lastly, major positive catalyst. Structural catalyst for Bitcoin. So BlackRock, the world's largest asset manager, I want to say probably sitting on close to 10 trillion AUM, is partnering with Coinbase to make it easier for institutional investors to manage and trade Bitcoin. So this is exactly the kind of things you need to see to continue to perpetuate the adoption story, the Metcalfe's law of it all. Ultimately, this is a structurally positive catalyst, but doesn't necessarily mean Bitcoin has to go up today on that or next week or next month. And in fact, Bitcoin is actually down 2% today on the news to only up 16% month over month. It's still down 42% over the past 3 months. Don't blame that on 42 macro, or I guess you could probably blame it on 42 macro. We did issue some very active and very well-timed sell signals on the crypto asset class, both going back to December 10th and then again on April 8th. Anyway, U.S. dollar 2-year inflation swap rate down 7 basis points day over day to off 38 basis points month over month. This is one of the things that has really catalyzed a lot of positive response in equity and credit markets. Is this significant decline in short to medium term inflation expectations? 2-year inflation swap rate is actually off 110 basis points over the past 3 months. So the market is looking ahead and saying, hey, look, inflation is going to come down. Trust the Fed, and given the benefit of the doubt to the Fed that they may not have to do nearly as much as they're guiding to in terms of their forward guidance. So switching gears to our volatility adjusted momentum signals and probable ranges. U.S. dollar, that is still bullish VAMs, still oversold there. Gold, bearish VAMs, still overbought here. 10-year nominal treasury yield, that is neutral VAMs. You got about 18 basis points of downside, 33 basis points of upside. High yield credit spreads, bullish VAMs, still oversold there. S&P 500 neutral VAMs finally overbought here. Has been ripping. Now you're getting an overbought signal there. But as we talked about this in the Around the Horn on Saturday, bears, you got to be patient. The robots have taken over. The CTAs, the quants are clearly flowing funds in this asset class. If you just look at the Sharpe ratio, the rebound we've seen in the last kind of 6 weeks, it's very clear that dips are being aggressively bought by sort of not necessarily price insensitive, but certainly economically insensitive investors. So just let it breathe. Markets aren't going to go straight down on the bottom of the page. They're not going to go straight up the top of the page either. Just temper your expectations as it relates to the near term. There's a lot that we talked about in our leadoff morning note. We're seeing some positive signs from an economic standpoint that is, widening the distribution of the probable outcomes back in the direction of creating some positive skew. So definitely wanted to make sure everyone's aware of that. Go check out the leadoff morning note if you haven't seen that discussion. VIX bearish VAMs still in the middle of its range. NASDAQ 100 neutral VAMs, same setup as the S&P. Russell 2000, same setup as the NASDAQ and S&P as well in terms of neutral VAMs overbought. Bitcoin bearish VAMs here. Got about 12% downside, 6% upside. Ethereum bearish VAMs. You got about 8% upside, 20% downside in the range. Shanghai Composite neutral VAMs bounced a little bit this morning, but kind of a tepid bounce just given the kind of fade we've seen in the last 6 weeks or so. More or less 1% downside versus 5% of upside in the range. WTI crude oil neutral VAMs more or less in the middle of its range. Ag bearish VAMs more or less in the middle of its range. You got about 3% upside, 5% downside, and then industrial metals bearish VAMs. Those are still overbought. So with that, Darius Dale presenting our macro minute for Thursday, August 4th, 2022. Best of luck out there today. Cheers.